Let's have a session on AQA Paper 2 GCSE Business. So again, we're going to look at 8 big topics, and that's based on the advanced information link that is in the description box below. Check it out. Know your advanced information. So the first topic in Paper 2 definitely needs to be revised is sustainability. Reminder, sustainability is the ability of a business to meet its customer needs in the short term, but not deplete the natural resources it uses to produce its output in the long term, or to create further global warming. When we're thinking about sustainability, remind yourself of the sustainability and profit trade-off. Now, I've done a video on that if you want a more enhanced explanation, but the basic gist. Businesses can become more sustainable, but this may create additional costs to the business, hence the trade-off, the conflict. And therefore, businesses may be faced with a decision that if they want to be more sustainable, they must invest in sustainability techniques and technology which may reduce their profits. This is the sustainability profit trade-off. The second topic to look at, product differentiation and USP, unique selling point. So product differentiation is when the marketing department attempts to distinguish a product from its rivals. A business will attempt to do this by creating a USP, a unique selling point. Benefits of having a USP. If a business has a USP in a competitive market, it will stand out from the competition, therefore increase sales and market share. And as the business and its products become well known, it will create a stronger brand image. And this will make customers less price sensitive, meaning the business will be able to charge higher prices and increase revenues. The third thing to look at, interest rate changes, the impact. It's on paper 1, it's on paper 2, it's clearly an important concept that you've got to have locked down. A reminder with interest rate changes is the impact on producers and the impact on consumers. Starting with the impact on producers, that's firms, the business. If interest rates increase, it will make it more expensive to borrow money. This will greatly impact those businesses that rely on overdrafts and loans for finance. This will lead to higher costs and therefore lower profits. Higher interest rates will make investments in capital such as machinery more expensive if a loan is being used, and this may reduce businesses' investment levels. Now, the impact on consumers, so a different impact, this time on consumers. If interest rates increase, it makes it more expensive to borrow money, but more rewarding to save money. This will encourage saving and discourage borrowing. As a result, consumers will have less disposable income, so demand for goods and services will likely fall. Ratio analysis. Got to know those ratios. Gross profit margin, net profit margin. That's what ratio analysis is. So we'll start with a reminder of gross profit margin. It's a common question. It's likely to be a quantitative question. So gross profit margin is gross profit divided by revenue times by 100. You must express it as a percentage. Also watch out if the question asks for 1 decimal point or 2 decimal points. Look at the question carefully. If you need to calculate the gross profit, remember, gross profit is different to gross profit margin. If you need to calculate gross profit, it's revenue minus cost of sales. And you will find that on the income statement. The other ratio you need to be aware of when they talk about ratio analysis is net profit margin. Net profit margin, again, expressed as a percentage. Formula is net profit divided by revenue times by 100. If you need to calculate the net profit, remember net profit is different to net profit margin. Net profit is the gross profit minus expenses. And you'll find that on the income statement. The last thing to think about with ratio analysis is the benefits of it. So it's useful to have your GPM, your gross profit margin, and your NPM, your net profit margin, to compare to previous years to see how the business is trending. Also, you might want to use it to compare to your rivals. And it's also useful for stakeholders, such as potential or existing shareholders. Another quantitative skill to be aware of, ARR, average rate of return. A reminder of the formula. ARR, expressed as percentage, is your average annual profit. Remember, annual means yearly, so your average yearly profit divided by the cost of the investment times by 100 because it's expressed as a percentage. Now, if you need to calculate your average annual profit, it's just an average. So it will be the total divided by how many. In this case, it will be the total profits divided by how many years. So if they said the total profits were £10,000 and that's over 10 years, clearly it's £10,000 divided by 10, which is 1,000. Again, with ARR, watch out for decimal points. Is it 1dp? Is it 2dp? 6, they've stipulated it, loss leader pricing as one of those pricing strategies. So loss leader pricing is when a product is sold at a price less than its cost of production in order to attract customers or sell other more expensive products with likely higher profit margins. Maybe it comes up as a longer question. Let's look at the benefits and the issues of loss leader pricing. So loss leader benefits. Loss leader prices will encourage customers into the outlet or onto the website if it's an e-commerce or m-commerce store. At this point, customers will see the other products the business sells, and they may purchase additional products with higher profit margins. Therefore, the business will increase sales for other products. Loss leader pricing may increase awareness. It could be used if you are a new business as a method to increase your customer base. And the third point, loss leader pricing is an effective tool to recoup costs on a product that is in the decline stage of the product life cycle. Now, of course, you need to know the product life cycle in each of the stages. Now, loss leader issues, potential limitations there. Loss leader, of course, results in the business making a loss on that particular product it's running loss leader pricing on. And loss leader pricing is susceptible to bulk buying, which will mean if a customer buys an enormous quantity of the loss leader product, it might cause a larger loss for the business. Can they stop that somehow? Other things, what if you do loss leader pricing, but the customers don't buy the other products? Then it hasn't worked. And how long are you going to run the loss leader price for? Because the longer you leave it for, the more losses you make on that product. All sorts of considerations for loss leader pricing. Number 7, extension strategies. Now, extension strategies are a method for a business to increase sales in a saturated market. And it's very common to run extension strategies in the maturity stage or the decline stage. The maturity stage to extend your time there, or decline stage to try and get back into the maturity stage and continue those sales. Now, examples of extension strategies to be aware of. You might target a new segment. So you want to think about segmentation. Reduce the price. Add new features to the product. Update your packaging, just advertise more, or enter new markets, for instance, new countries. Finally, number 8, public limited companies and methods of expansion. A reminder, a public limited company is a company that is owned by its shareholders and managed by its directors. Shareholders choose the directors, the company sells shares to the public through the stock exchange, and you become a public limited company to get enormous finance, the enormous levels of finance that you could generate on the stock exchange. Now, when we're thinking about growth, remember growth can be internal or external. Internal, iPhone. I for internal, franchising, outsourcing, new stores, e-commerce. I know it's not how you spell phone, but it's a way to remember it. So iPhone for internal growth. On the other side, external growth, commonly associated with public limited companies, is mergers or takeovers. Know your types of growth. Know your types of expansion. It's the same thing. So that's number 8. We've dealt with the 8 big topics. And the final thing to think about is just smelling those longer questions out. So perhaps areas they might challenge you in terms of those 9 and 12 markers. Of course, I don't write the paper, I don't know, but I'm just looking at that advanced information, trying to get a feel. So we might be thinking about extension strategies. So I advise you to know your extension strategies, the different types and the pros and cons of each extension strategy. Know your sources of finance, absolutely important topic, vital, particularly bank loans, particularly overdrafts. The reason being that interest rates is again mentioned in paper 2 as well as in paper 1, and it says that idea of interest rates fluctuating, and that will be important to bank loans and overdrafts. Of course, the only pricing strategy that's explicitly mentioned is loss leader pricing, so you'll want to know the pros and cons there and what it is. Perhaps it could be, should they do it, should they not do it? Public limited companies and expansion methods, again mentioned, want to be on top of that, and the differing expansion methods, knowing franchising, knowing outsourcing, knowing new stores, and of course knowing e-commerce. And then the final thing to consider is sustainability. Could be a longer question, could be part of the 12 marker, ethical considerations. Don't underestimate telesales. It's hidden there, maybe it comes up. And of course, interest rates, I think, is absolutely vital this year in both paper 1 and in paper 2. It could be the crux of a bigger question, so you must understand that concept. Now, of course, there's many other different types of questions that could come up, so make sure you've revised everything within the advanced information. And the last thing to say to you is thank you for your support this year. This is the final sesh. Good luck.